Have you ever looked at a trading chart and felt like the candles were speaking a language only experts understand? What if I told you? Every single candle is a tiny battle report, revealing who won between buyers and sellers, who lost, and what might happen next. Today, I'm going to take you inside that story. By the end of this video, you'll understand candlestick charts in a way most traders never do, not by memorizing patterns, but by learning the psychology hidden inside every line, wick, and shadow. Let's dive in. Why candles matter more than numbers. Before Japanese candlesticks became popular, traders used simple bar charts. They showed price data, but not the emotion behind the price. Candles changed everything. A candlestick gives you the open, high, low, and close, just like a bar chart. But it adds something more powerful, a visual story of the market's momentum. The rectangular part, the real body, instantly shows who had control during that session. If the body is white or empty, price closed higher than it opened, buyers were in charge. If the body is black or filled, price closed lower, sellers dominated. Even without reading numbers, your brain quickly sees strength, weakness, indecision, or aggression. This is why Japanese traders say, candles are the language of the market. Understanding the real body and shadows. Let's break down a candle into its pieces. Think of the real body as the heart. It shows the war between bulls and bears. But the thin lines above and below, the shadows, they tell you how hard each side fought. The upper shadow is the highest price reached. The lower shadow is the lowest price of the session. If a candle has no upper shadow, we say it has a shaven head. If there's no lower shadow, it has a shaven bottom. These tiny details reveal things numbers alone could never tell you. For example, if the close is far away from the high of the day, the market tried to move up, but failed. If the lower shadow is extremely long, sellers were crushed at some point in the session. Every shadow is a footprint of buyer and seller behavior. The dogee, when the market holds its breath. One of the most fascinating candles is the dogee. A dogee forms when the open and close are almost identical. It looks like a cross. It feels like a moment of silence on the chart. Why? Because neither buyers nor sellers could win. It represents pure indecision. Imagine a tug of war where both teams pull with all their strength, but the rope doesn't move even an inch. That's a dogee. Dogee candles often appear at turning points, not because they reverse the market, but because they signal hesitation just when strong trends start to weaken. It's like the market whispering, something is shifting. Pay attention. Spinning tops. The market loses direction. Another candle you'll see often is the spinning top. It has a small real body, long upper and lower shadows. This means buyers pushed price up, sellers pushed it down, and in the end, neither side gained much. It's confusion. It's uncertainty. It's a lack of commitment. When spinning tops appear after a long move, up or down, they can hint at a trend losing momentum. Think of them as the market saying, I'm tired. Maybe it's time to change direction. A real chart example. Reading the story. There was a perfect example. A market was falling, strong black candles, lower closes, sellers in control. Then, suddenly, a spinning top appeared after a sharp drop. At that moment, sellers were still strong, but the spinning top was like a crack in the wall. And what happened next? The very next candle confirmed it. Buyers stepped back in. The market rejected lower prices, and the trend began to shift. That's the magic of candles. They don't just show price. They show pressure. They show emotion. Fear, confidence, hesitation, all of it is baked into the candle. Why the close matters more than anything. One thing Japanese traders emphasize heavily. The close is the most important price of the session. Why? Because it reflects the final decision, the outcome of the battle. A market may go up intraday, fall drastically, spike again, but the close tells you where both sides finally agreed to end the fight. Western traders analyze the close too, but Japanese candlestick analysis treats it like the heartbeat of the chart. This is why candles make emotional market behavior easy to read. Your eyes instantly notice strong closes, weak closes, rejection wicks, exhaustion, momentum shifts. With bar charts, you have to look carefully. With candlesticks, the story jumps out at you. The psychology behind the patterns. Candlesticks aren't magic. They work because they reflect human behavior, and human behavior repeats. Think about a long lower shadow. Sellers force the market down aggressively. But buyers came back and pushed it up. That shadow is not just a line, it's a rejection. A long upper shadow? That's greed getting punished. Price went up, but sellers slammed it back down. Every candle is a message. Who attacked? Who defended? Who won? Who hesitated? Who gave up? Once you understand this psychology, the chart feels alive. Like watching a movie, where every candle is a scene in the story. Your big takeaway. Candlestick charts aren't about memorizing patterns. They're about understanding the fight between buyers and sellers. Every real body, every shadow, every dojee, every spinning top is a clue about momentum, strength, weakness, reversal, continuation, emotion. When you learn to read this silent language, you stop guessing and you start understanding. And if this helped you, make sure to like the video and subscribe.